This is Farzan Gadiali, your finance expert. Today at midday, we're going to analyze 2022. What sort of year is it going to be as far as the stock markets is concerned, the economy is concerned, and overall well-being and prosperity? 2021 has been a fantastic year for wealth creation. We've seen the Indian market move in one-way direction and a lot of wealth has been created. This wealth has not only been created by very smart, savvy investors, but by small retail investors who've really invested anywhere between 40 to 50,000 rupees and have really turned out a good experience for them. 2022 will be a volatile year. When I say really volatility, what do I really mean by it? The stock markets may probably end up being as good as 2021, but we will see a lot of volatility. The markets will go up and come down really. We saw a bit of volatility as far as December 2021 is concerned, wherein the headline indices corrected by about 8 to 10%. 8 to 10% correction is not really a correction. A correction to the magnitude of 20 to 25% is something that can really happen in a raging bull market that we are really in. So as far as 2022 is concerned, there are some headwinds that we will have to really face. First is the third wave of COVID that India is really facing. The peak of the COVID, as far as India's third wave is concerned, is almost over, and we are seeing declining numbers across metropolitan cities like Mumbai, Delhi, and various other places. But cases are really there. Fortunately, the percentage of hospitalizations and deaths are not really there to cause an economic lockdown. What hurts the economy is a lockdown situation that's really there. Hence, it doesn't look that bad and the worst seems to be over. Second most important factor is India in the first half of 2022 will really witness 5 state elections. This is going to be a major event, really a run-up to general elections 2022. So a lot of populist measures will be taken up by various state governments in order to really augment their position as far as the states are really concerned. We have the union budget that's going to be presented on 1st of February, a budget that will want to please everyone. Hence, investors should look forward to the budget where the man on the street, the common man, and all sectors probably will be given their share, wherein all feel happy and a feeling of populism of the government will really be there. A lot of times, a populistic budget need not be a very economically good budget because various other reasons, due to fiscal deficits and the expenditure that government will do at the central level, at the state level, and various other reasons, which will add to the volatility of the stock markets. The most important is the Federal Reserve. The Federal Reserve is the central bank of the United States of America, the largest economy in the world. As we have the RBI, they have the Federal Reserve. What is happening in the United States today is inflation is at 7%, highest since 1982. That is a lot of inflation for an economy like the United States. So what is the Federal Reserve going to do? The Federal Reserve will really increase its rates. So what happens is when the Federal Reserve really increases its rates, a lot of money is pulled out by foreign portfolio investors from emerging markets like India. Hence, there could be a lot of volatility as far as that period is really concerned. Will the Indian markets crash? Well, there are 2 data points that suggest that they may not. The period of 2004 to 2006, the Federal Reserve rate moved from 1% to about 5.2%. The Sensex moved from 4,700 to about 10,400. Hence, it did not crash during that period. You look at the near past. If you look at the period between 2015 and 18, the Federal Reserve increased their rates from 0.5% to 2.5%. What happened to the Indian markets? The Sensex went from about 26,000 to 36,000. So both the instances suggest that it's not necessary that when the Federal Reserve will increase the rate, our markets will crash. So investors need not panic. It will add to volatility. You would see swings during periods where the rates are increasing, maybe some money is pulled out. but the return on the Indian markets will come about. If you really look at the Indian economy today, we are very well poised. We've had a V-shaped recovery in most sectors. Today, what is really happening is corporate profits have really been picking up over a period of time. With the corporate tax raise that happened in 2019, we did not really feel the full impact of it because of the 2 years that we lost due to COVID. However, now where we are looking at a situation wherein economy may not shut down due to COVID and the economy is coping well with the third COVID wave, this positive impact of a lower tax rate really will benefit the Indian economy. As far as the Indian economy is concerned, the capex cycle, as we call it, the capital expenditure cycle is really kicked off. This is really huge. There are three important aspects in this. If you really look at the internet companies or all businesses related to online and internet have got a net investment of about $40 billion in the last 12 months. $40 billion. What are they going to do with this? They're going to spend this money. Where are they going to spend this money? They're going to spend this money in the Indian economy. This will really propel and excel the Indian consumption story. Hence, a lot of consumption is really going to come about as far as the next couple of years is concerned. If you look at the present private capex to GDP, it's about 3%. If you really look at it at the peak of the Indian economy, it was at 18%. So we have a long way to go. A lot of estimates by a lot of agencies say that we will probably go from 3% of GDP to about 15% of GDP to private capex. So a lot of capital expenditure will really happen. Where will this expenditure happen? Mainly two avenues. One is most important. India is really complying with the Paris Accord, wherein we are going green. Okay, we are going green. Solar, hydrogen, gas, a lot of capital expenditure is going to take place as far as those sectors are really concerned. Then when you really look at it, as I said, in the next 24 months, we have the general election coming in. So there'll be a huge capex on infrastructure that will really take place. When this kind of capex that really will take place in infrastructure, a lot of jobs will be created, a lot of money will be given. It will propel the Indian economy. So far the disconnect that we were really seeing from the stock market, wherein the stock market was rising and the Indian economy wasn't. Now the Indian economy will play the tune of the stock market, and probably both the cylinders will fire in tandem, and it will result in the stock market really doing well and the Indian economy doing well. Always remember, when we are talking about the Indian stock market of today, the stock market of 2020 onwards, the main people that have participated are the small investors that have invested small amounts of money. Hence, even if there's a shake-up at the foreign portfolio level, the Indian stock market need not crash. There will be a lot of volatility. The key for all investors, do not panic. If you bought a stock or you've invested in a business that is really there, you have to really look at it at a long-term basis. And the long-term prospects of the Indian economy are extremely bright. That's all we have for Finance Ka Funda this time. Enjoy the run-up to the union budget. It's going to be a very populist budget. A budget that will really help the common man on the street, the industrialist, the small and medium enterprise, and everyone that's really there. Do not panic. Be careful. There will be a lot of volatility. And do not really assume that the Indian growth story is over. And please remember, more wealth will be created in the next 10 years compared to what has been created in the last 75 years. And the next decade indeed belongs to India. Thank you so much. Till we see you soon. Take care, be safe, and create a lot of wealth. Thank you.
Subscribe to Midday India. Get direct notifications on all our videos by clicking on the bell icon.